Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on May the 14th, 2020 with the Forex Market Analysis and Live Trading Breakdown for you. Before we get into our webinar, let's just remind you with our disclaimer that this webinar is for illustrative and educational purposes only. So with that, we are going to give you one quick plug for the book High Probable Japanese Candlestick Patterns, available on Amazon.com and Kindle and paperback versions. And we have a High Probable Japanese Candlestick Pattern buy signal that we are going to go over. So with that, let's go to our Forex-Trading-Unlocked.com website. And here we go. We already have the dollar index page pulled up on the workstation page. As you can see, our consolidation continues to hold, and probably more the same is to be expected. We have unemployment claims that came out today. Obviously, they came out high as they were expected. Let's see what kind of reaction we have going on in the market as we are heading towards lunchtime in the Chicago time zone. Okay, well, we have not much of a range for the euro today. It's lower than yesterday. Almost contained. Yesterday and today pretty much just make an outside day of Tuesday. So let's see what we're at right now. Our range for today, we have a high of, let's see, 0824 and low. You got a 50 pip range, not very much, especially when you consider unemployment claims, everything else that's going on. So we'll just have to wait for a signal because we don't have one right now. This is consolidating just like the dollar indexes. I have to say that we were looking for consolidation to come into the marketplace a month ago. Now that we have it, the question is, are we just winding the coil, or are we really set for a big sideways trade with the major currencies? Right now, I would say you're going to have to look at this containment range here right around a 111.53 for any upside breakout, and then literally this last swing low here that we had, excuse me, just a month ago, around 107.25 for our downside. So we're clinging to some key support, and the main thing being is that if we take out these lows, then there might be some other fundamental weakness that's driving that slide. If not, then we're probably going to maintain this posture right here, where, see how we have support here? I mean, and we're hovering right above it right now. So either we're going to gain support, and this will help to keep our containment for the lower end of this range, or we'll fail. Like you can see that we failed here. We came back real quickly. This is when volatility was super high. Volatility started to drop. We found support here again, just like we had back here in February. So it seems like this baseline of right around 107.78, somewhere between 107.5 and 108 even, seems to be a very strong baseline of support for the euro US dollar. Will it maintain? I don't know. We're just going to have to see. But right now you can see that the major currency versus the dollar, even though it's lower today and hanging on critical support, it's not hammering it, and it's very quiet. So let's go and see what's going on in the rest of the European quadrant. British pound US dollar. Now this is starting to finally look like it might want to do something here. We've had this head and shoulders formation here that we've been eyeing, and it just started to cling to sideways. But now it looks like we have a confirmation that this market wants to go lower. How much lower can this go? Well, let's give it just a quick little fib look and see how this goes. All right, so let's just say that this is really truly going to be a head and shoulders formation that's triggered. You got to remember, with the way volatility, it was super extreme, but then it tightened up so quickly in the pound that our expectations for a downside move are not going to be as great as you might think. So when you look at this move here, we're already trading at 121.92. We're looking for this probably to come into this support band of around 120.19 to 118.73. This would put you between the 50% and 0.618 Fibonacci percentage levels. And that would be a very good support base. Remember, this market still isn't a bear trend. It's been sideways for the past couple months. And remember, this is a head and shoulders formation here. We have a shoulder, we have a head, we have a shoulder. This is a lower move high. So remember, after we had made, a lower move high, higher move low, higher move high, higher move low, this set the trend into a neutral to somewhat bullish outlook. But then we had this failure here. We failed to make a higher move high, and now we have confirmed taking out this, making a lower move low. So that has what? Indicative of what? Remember, basic fundamental theory of trend. Higher move highs and higher move lows is a bullish trend. Lower move lows, lower move highs is a bearish trend. So right now we are making lower move lows and lower move highs. We have taken out the neckline. It does look like we have, you know, a pretty decent little bit of a ways to go yet on the downside. Not that this market's overly bearish, but it looks like it's definitely the bearish momentum has the ability right now to drive this down into that area. Now, is it going to happen like very quickly? Well, we haven't had volatility like this since 2 months ago. The pound could easily, it's known for having radical moves in a day. Right now, doesn't seem like there's any reason that that's going to touch off like that. I think it's probably going to be more of a grind. Now, here's the problem with getting short here. It wouldn't be unlikely for this market to chop higher before it tests support again. Like, we could be just setting the lower part of a trading range here for the pound. It doesn't mean it's going to go down into this range over here. And then even if it does, the question is that going to set the base? Or, you know, we don't know. We'll see when it gets there. We have other fundamentals that are finally creeping back into the market. See, we've had this fundamental with the coronavirus driving the currencies for so hard for the past few months that now we're in that aftermath, that aftershock. So the question is coronavirus going away? Absolutely not. But the market's got that figured out already. What is it going to do? Well, we have to see how the different governments and central banks continue to react. We now have a divergence in central bank actions. We also have a divergence in certain currencies. This is the first time we've seen this in months. So this is kind of a good indication that maybe we're going to start to see some free-flowing swing trading going on once again. But we have to come out of this haze first and see what we can, if we need a signal. So right now we do have a short-term sell signal confirmed with this neckline having been taken out with multiple daily closes. But look at it, just in the past 3 days. On Tuesday, we settled at, what is it, at $1.2244. Yesterday, we settled at $1.2229. Not a big difference in price there. It's only slightly lower. And now we're trading at $121.94. So for a market that has really extreme volatility and bigger ranges than most currencies, this is trading really tight, which is scary. Whenever the pound gets light before it ends up making some kind of crazy erratic move. So hopefully you're going to be on the right side, right? So let's look at the US dollar Swiss. Remember, one of our flight to quality currencies besides the dollar is the Swiss. Well, this one's looking just like a dollar index chart, isn't it? It's just wedging. We have no signal here, and I think that right now... your guess is as good as mine. It's going to be staying contained in this range, and not only does it seem to be containing in the range, it's hanging out in the middle of the range. So with that, there's no signal here. We have to wait for. We had one last week, and it hit its point, and it wasn't even that big of a shot to begin with. It was an inside trend move, and now here we've got consolidation. If you look at since we spiked here on this last lower move high, the past 5 trading sessions, we've basically been trading around the same area. So we have a really winding coil going on, and we really need something to pop to give us a clue. Now, you wanted to know about a high probable Japanese candlestick pattern that we are tracking here. We have a signal. If I can get this typed in correctly, you can get the chart. Here we go. All right, so the US dollar yen, what's going on here? This market's been consolidating on a really weak break for the past month. We had a buy signal that was triggered last week. This bottom day here, and then the following 2 days after that, it's called a 3 inside up buy signal. We have a binary option actually on in the Nadex binary options where we bought, we bought 2 different options, and but it's all the same strike price, and that is the US dollar Japanese yen is greater than 107.75. You can see that we had purchased it on the 13th, so, and now we are waiting till expiration, which is tomorrow. And right now we're trading about we're 107.10 is the number. That is correct. And that puts us at just right below here where you see the 107. Oops, we got this at the wrong. This should be 107.75. That is correct. Okay, so we have the strike price is this little line that's running across, this dotted line right here. You can see the market tested it the other day. Now it's corrected back, but we had made a higher move high. Now the question is, did yesterday and today set the lower or higher move low, and are we going to get a rally up through that 107.75? Currently, right now, it looks like we have a potential to still make another run at resistance, so we'll see what kind of momentum we can build over the next day and a half that we have left in the trading week. So we are still bullish the US dollar, Japanese yen, and we also have a FX position on still in that, and we also have a US dollar Canada position, which we'll get to later. All right, so now we have this trading zone of the world, so we're going to go to the Australian dollar. The Japanese yen has been, US dollar yen has been trading slightly lower on a grind. Now we've got a little bounce. Interesting, Australian dollar has been a bull since the middle of March when other currencies were still barely correcting and bouncing all over the place. This one is, it maybe had been that oversold and the volatility was that extreme. So, but whatever the reason, we have had a correction that's lasted a nice month and a half, but now it's starting to show some potential signs of weakening. Here is a potential shoulder, here's your head, and here's a potential shoulder. So if we get a nice little sell-off here and break this neckline, then, and look at what we're doing today. See? So we have a potential sell signal going on here, but it has not been confirmed. We need the market to settle below this neckline and take out this low here to confirm a lower move high and a lower move low, setting a neutral to lower short-term trend. Then we'll be able to figure out a target. But until we see where it closes and where it's at, we have to wait. So today's close will be interesting because we may get a sell signal. Now, another market that may already give us that signal has occurred, and we've been talking about this for the past couple of sessions, is that the New Zealand dollar, US dollar, and the Australian dollar, US dollar, which have been in tandem, this one hasn't been as strong and as volatile. Very similar by charts looks, the way the charts look actually, and here you had a head and shoulders as well. It settled below it yesterday, so this was one day ahead of it, and now it's continuing lower today. So we have a nice little sell signal confirmed in the New Zealand dollar, US dollar. To give you an idea of where it possibly may get to, let's pull up our little numbers here. Here's our last shoulder, so we'll put this here. And then we got this one here at the 0.618. And we'll get rid of this to make it a little clearer for you. So here's our downside target zone now for the New Zealand dollar, US dollar. So right now we're trading right around 59.69, and we have a target of 58.21, 57.35. So that's where we're looking at for the New Zealand dollar, US dollar, and we will see what happens with that as this trade begins to unfold. Now remember, this your risk now for this trade here will be your last swing high. And hopefully this trade will continue to manifest itself. Now, if this continues to go, remember, we have the dollar in a sideways chop. That means that there doesn't really need to be a lot of dollar strength for this to happen. This could be just New Zealand dollar weakness that's going on. And I'd be careful with the Australian dollar. Don't try and front run a trade. Maybe there might be divergence where this market may actually continue to go lower versus the dollar, and the Aussie may go sideways or even higher. So be very careful. Don't try and front run a trade. Wait until you have an absolutely a confirmation, which you need to have that close today below that neckline to even get you inclined to start looking to be any type of, bear, at least for the short term, for a nice sell-off. Okay, so now let's go and look at the US dollar Canada, where we know we have another trade on, and we are along this market. And that came in from an intraday signal, and we already raised our stop to where it's no matter what, we'll make at least a couple pips. And then depending on where it settles today will be indicative of whether we raise the stop up or whether we just leave it where it's at. No matter what, we're going to leave it where it's at. Probably close out the position, though, tomorrow afternoon and not take it home for the weekend. This was an intraday trade. The market has fallen short of our upside target objective, but we still have the ability to get a pop today, because today it actually rallied up and made newer move highs on the day, which helped us out, but we still fell just shy of our target. So we'll wait. We'll see if we get an upside breakout. This thing is still winding. We got a chance, so it's a free trade right now. We're already up, so we'll just have to ride it and see what happens. Now, the U.S. dollar Mexican peso, here's one where we've been looking for some sort of decision on whether or not we're going up or going down, because this had a head and shoulders formation that had occurred a while ago. And here we're just drifting through it, going sideways. So the question is this really a head and shoulders? Well, unless we take out, I have to say, we have to, excuse me, take out this 23.21 peso to the dollar, or US dollar to pesos to the dollar level. If we take this out here, then we can figure out some targets on how far we might expect this market to turn back to the downside. But right now, I think that with the fundamental coronavirus is still pretty much acting and driving this trade for this market. So let's look at the US dollar Turkish lira. Here's one. It's another outlier that, wow, look at this one. It has been pressing this correction. We've been looking at this raging bull for quite some time. Now it's hanging on key support. So this is really like a horrible little level here, because it bobbled here, for you can see, for a week and a half. And now you could say that probably the key support level would be this last swing low. But I don't know. This thing is a volatile beast, and it's been such a bull. And when it corrects, this is like pretty much like this correction here. This is one of the biggest corrections that it's had in the past 3 months. So this could be where it snaps back like a rifle and just shoots it to new highs, you know. So I'd be careful selling into these levels. If you're already short, just keep lowering your stops, and I think you'll be good. If you catch a big break, all the power to you, but be careful. You're coming into a heavy support zone here. Now, how is that support when you're looking at this kind of a bull? Well, it just has to do with where the fundamentals right now we're going off of. We're going off of basic fundamental support levels to see where this thing will find its corrective base to. Because this could, I mean, if we had a long-term correction and this was the beginning of a true bearish reversal for this, and this was a top, let's say, which we're not ever going to try and pick, then yes, this market could easily tank back down to you know, this area here around 6.2 to $6 for the US dollar Turkish lira. I don't think that that's going to happen anytime soon. I think that what we have right now is, because the world is coming out of this haze from the coronavirus, especially in the EU and Asia, so it doesn't matter that if America stays in lockdown, the rest of the world's kicking back into gear. So even Turkey, I think, is going to begin to turn its tides as well. So their numbers haven't fared very well, but they're starting to subside. And the whole thing is that the curve, as it flattens and around the rest of the world and these numbers start to subside, the realities and the aftershocks start to wane. And that's probably why we're getting this sell-off right now. But don't kid yourself, this market could still make new highs yet. So we'll have to monitor this trade. You know, and I just say very, very careful trying to sell this into the hole right now, because if this is, and you're selling in front of a weekend, all of a sudden you're going to wake up on Sunday afternoon and see this at $7, you know, at 20 again or above, making new highs, and it can go that fast. Remember, when we've had all these sell-offs here, it took about what? Mostly, let's see here, we had 1, 2, 3, 4, 5, 6, 7, 8. 9 days before you turned around and actually came out and made new highs. Okay, that was one of the longest runs. Here you had 1, 2, 3, 4, 5, 6, 7, 8. Okay, so 8 seems to be like one of the long runs. Here, what day are we at? We're at 1, 2, 3, 4, 5, 6. So 7 would be Friday. Sunday would be 8. Monday, so then that would put us at, absolutely, we could be coming in just on a timing basis of the way these corrections have lasted for, and been about the same severity. This would be a good target zone for support, so just be mindful of that. So now let's go back to our two trades that we have on. We have a US dollar Canada trade, and remember, this is one of our intraday signals, so it's already almost capped out. And we have that trade on. We'll see if we get stopped out or what happens with it. And then we also have our US dollar Japanese yen trade still on, which we have in both the binary and also the FX market. Obviously, tomorrow it expires for the binaries. So we're looking for a nice little pop. I mean, we're trading a couple pips higher than when we first got to this yen, which is nice. We just need it to go another 60 pips, and we can just get out of this option and get out of it before expiration. And that's what we're going to do. Because of the lack of time left, we're not trying to see it hit that target at 108.51. We're going to try and just get this options to profitable and then get out of them, due to the fact that the time decay is definitely running against us right now. And let's go back to the Euro US dollar where we started, just to see if we've seen any type of a change there. Yeah, it's pretty much just bobbling, hanging on support. So that's where we're at. Remember, we had that high probable Japanese candlestick pattern, the 3 inside up pattern. If you want to learn how to trade that pattern in the Forex markets, the futures markets, the options markets, you name it, Read the book High Probable Japanese Candlestick Patterns, available on Amazon.com on Kindle and paperback version. Please subscribe to our YouTube channel, Forex Trading Unlocked, and check us out every day at www.forex-trading-unlocked.com.